Hello and welcome back to another edition of Chat with Brandy. I hope you guys all had a great long weekend. I did. My parents made me an amazing meal. I didn't have to cook it all and I got to spend a whole bunch of time with my family. We went to the new museum in Edmonton. It was awesome. Had a great weekend and I hope you did too.
Hello.
Oops.
And welcome back
No,
to another edition
we don't need to hear that
Chat with
twice.
Brandy. I hope you guys all had a great long
There we go. Okay, so last week we talked about working from home, whether you're running a business or working as an employee out of your home. So if you missed that video, you can check it out by going to my website, or if you go on my Facebook page, you can check out the videos tab on my Facebook. Today we are going to keep up with our frequently asked questions series and talk about vehicle expenses. So those of you that drive your vehicle for work or for your own business, you will want to tune in today. And if you know anybody that drives for work, feel free to share this video with them. So there's two kind of broad categories of people who may be driving for work and would be able to use a vehicle deduction. So the first one is self-employed people. So whether you have a corporation or a sole proprietorship, and also this would include like landlords and truck drivers who use their own truck. And then the second category are employees who are required by their employee to use their vehicle for work. Just like last week, in this case, you would require a T2200 form. I will link that again. And it kind of depends. You may or may not receive a non-taxable allowance. So it'll just, the T2200 will outline that. Okay, so regardless of what category you fall into, if you're using your vehicle any less than 100% of the time for business, you will need to keep a kilometer log. So we'll be chatting about exactly what CRA considers to be personal use versus business use and exactly how to fill out a kilometer log today. Okay, so I'm not gonna lie, you guys, keeping a kilometer log is very tedious, but it can be well worth the tax deduction. And if you decide not to keep a kilometer log and just guess, and you get reviewed or audited by CRA, they will disallow the entire claim based on that alone. So or even if you have a kilometer log and it's incomplete. So I've seen that many times. So it's very important to be keeping a kilometer log. So we're going to be discussing how to keep a manual log, which basically means you're manually entering each trip. But you should know that there are apps out there that will help auto track these things. So basically on your phone, you would just click a button saying, I'm starting a business trip now. You would probably have to enter a reason why, like a purpose for your business trip, or sometimes there's, I think, like pre-filled reasons in there, but everything else is going to enter. It's going to figure out your starting address, your ending address, and because it's GPS, and it will also figure out how many kilometers that trip took you. So I've heard good things about Stride, TripLog, and MileIQ. I will link those apps later. But today I'm going to teach you how to do a manual log so that you can kind of know exactly how to do it. So for your convenience, I have this template up on my website and I'll link it just to make it really easy. But any method that you prefer. So even like I know Staples has logbooks you can buy, or you could just write it on a blank piece of paper. You could use an Excel spreadsheet or whatever you want to do. But as long as it has all the information that I'm going to go through, it'll work. So the very first thing that you want to do, and this is super important, is on January 1st of each year, or like if you're a corporation and you have a different year than the calendar year, it would just be the first day of your fiscal year. You're going to enter on there your starting odometer reading and then your ending odometer reading for that year. So what that's going to do is that's going to show us our total kilometers, and that makes it so that you do not have to log your personal trips. You only have to log your business trips, okay? So that's very important. Then for each trip, you are going to enter, okay? So here you can see the beginning of the year and end of the year odometer readings. So then for every single trip, you're going to enter the date of the trip, the starting address, and not from home unless that is your main workplace, and we'll get more into that in a bit. The ending address, and this needs to be an exact location, okay? So if you drive out to rig sites to inspect them for a living, you need to enter the GPS coordinates on there. Like, they are serious about needing to know exact locations. And then the total amount of kilometers for that trip. If you do a round trip, you don't necessarily need to do 2 lines. You can just double it up for a simple round trip and just enter that in your notes. And then the purpose for your trip needs to be entered on there as well. And this can be fairly generic if you're concerned about privacy, like if you're a social worker or something, you don't need to put your client's name. You can just put client meeting there, okay? So we'll get back to me, hi. Okay, so that is a kilometer log, okay? So now every single trip is listed. Hopefully you guys can see this. Sorry. Okay, so you have that, and then at the end of the year, we're gonna add up all of the business kilometers, okay? So in this example, let's say 1,500 kilometers was business. Then we're gonna look at this and we're gonna go, okay, so we had 10,000 kilometers total this year. 1,500 of them were business. If you divide 1,500 by 10,000, you're gonna come up with 15%. Okay, so that is how we come up with our calculation. So that tells us that 15% of that vehicle's expenses are going to be deductible against your business or your employment income. Okay, so just gonna check my notes quick to make sure I'm not missing anything here. Oh, if you get a new vehicle in the year or you use more than one vehicle for work, you need to keep a separate log for each vehicle. So in the example that you trade in your vehicle, you would start a whole new log, let's say June 1st, with the beginning of that car's odometer reading, and then take it to December 31st, okay? Okay, so in our example, we had 15% business use. So, okay, and I'll also just kind of put this part in. Once you've done this perfectly for an entire year, we call this a base year. CRA does allow a simplified 3-month sort of forecast. What this means is you do the first 3 months of the new year. If your usage falls within 10% of the previous year, then you can discontinue logging and just extrapolate that number. This is a little bit more complex. So this video is gonna just be concentrating on doing that full 12-month log, but if you have questions about this, please let me know, okay? Okay, so now we have this 15% that we know we can use against our deductions. Oh man, let's talk about work-related trips first. Sorry guys. Okay, so if you're a business or an employee, okay, so you're a sole proprietor or you are a shareholder in a corporation or you're an employee whose employer requires you to drive for work, the definition of a business-related trip is pretty broad, especially if your main workspace is your home. If it's not your home, meaning you go to an office or some other space is your main workplace, traveling to and from home is not considered a business trip. So you cannot include those, okay? Other than that, you know, client meetings, supply pickup, accountant meetings, marketing calls, anything that's reasonably related to earning income is going to be a business trip. If you are a landlord, there are special rules. If you own one rental property, you can only use trips that are relating to maintenance and repairs of that property, including going to like Home Depot and picking up your supplies. If you own 2 different sites, so they have to be 2 different locations, so it can't be like 2 condos in the same apartment building, so you have 2 different sites or more, then you can claim rent pickup, general property management, so you have to go and do an inspection or collect, you know, laundry coins or whatever that looks like. Those are deductible, but only if you have more than two or more rentals, okay? So now we'll get back. We have 15% deductible. What can we apply this deduction percentage to? So I'm going to show you a list of deductible expenses. So here we have gas, oil, fluids, car washes, repairs and maintenance, insurance, AMA coverage, license and registration, but not tickets or fines. So speeding tickets, parking tickets, that kind of thing is not deductible. Business-related parking is 100% deductible. Loan interest is up to $10 per day or $3,650 per year. And then the last one there is depreciation or leasing costs. Now, those ones are subject to limits for most people. And hello. Okay, so for leasing costs and depreciation expense, put on your seatbelts, you guys, because this is where things start to get a little bit crazy, okay? The amount that you can claim actually depends on what type of vehicle you have. So there's 2 categories for vehicles. The first one is passenger vehicles. That is going to be the majority of you, for sure. This is if you have a car, And this is if you have a truck or SUV or van, and it's just for like taking you around. So you're not like a taxi, or you're not like a trucking company that's driving around goods and equipment. You're in the passenger vehicle category. And in that case, you do have limits on your depreciation and leasing costs. The second category of vehicles is a motor vehicle. So this is taxis, trucks, even SUVs or vans that are used to carry passengers or goods and equipment. So if you're an Uber driver or you're a delivery driver of that kind, then you'd be in the motor vehicle category, and you don't have caps on what you can claim for depreciation and leasing costs. But like I said, the majority of you are definitely in the passenger vehicle category. And in that case, your leasing costs and your depreciation costs are capped at $30,000 for the entire lease or ownership period. So what that means is even if you buy a truck that's worth $80,000, you're only allowed to claim depreciation on 30. Or if you lease a truck that's worth $80,000 over the period of the lease, you're only allowed to claim $30,000, okay? Plus GST or HST, depending on where you live. So depreciation, for those of you that don't know, it's sometimes known as wear and tear, is claiming the devaluation of the vehicle over a period of years, several years. The math on this is pretty complex, so it's maybe not Vehicle Expenses 101, but I'm happy to answer any questions that you guys have. So please let me know in the comments, or you can send me a PM if you have any questions on how depreciation works, the calculations, and that kind of thing, okay? There's also more complex issues if your employer is paying you a non-taxable allowance, or if you're driving a company vehicle and they're reporting the personal use part of your vehicle as a taxable benefit to you. We work that out a little bit differently. You can still follow the advice that I've given you on how to do a kilometer log and the receipts that you should keep. And by the way, if you have questions on how to keep those receipts tidy and organized, you can refer to my episode 1. But also, if you are in any sort of complex situation where you're not sure what to do, I'm always going to recommend that you speak with a tax professional about your individual case before making a claim on your tax return, okay? All right, so that is it for today. I know it was a lot. I'm just going to check and see if you have any questions for me. Kate, we are good for now, but if you do have any questions in the future, please let me know. Or again, if you would think that this video would be helpful for somebody you know, please share it. And other than that, I hope you guys have a great week, and we will see you next time. Bye-bye.